And the bearish run at Nigeria's equities market appears unrelenting, extending year-to-date losses of the all-share index to over 5.5%. For more on what to expect moving forward, we are joined by the Chief Research Officer at Blue Vertex, Dare Fajimolu. Thank you so much, Dare, for joining us today. And there seems to be no end in sight to this bear run that we have seen continue to unravel over the last few weeks. Do you get the sense that there's anything in the offing over the next few weeks that could potentially help to support this market moving forward?
Thank you for having me, Wally. So, yes, the market has been on a it has been on a bearish trend for a while. This is like the 10th consecutive day of decline, and one of the major drivers, one of the main things driving it is the fact that investors are shifting from equities to fixed income because of the rising yields in the fixed income space. So even though the yields are not super, but they are guaranteed and they are rising, and that is good enough for the investors that have because the equity market currently is about negative 6% or so year to date. So that's like a viable alternative for them. In the near term, what can probably slow things down, I mean, in terms of the decline, could be the possibility of the half-year results, which usually, in some cases, will come with dividend announcements with some names that have been known to pay half-year dividends, interim dividends in the middle of the year, like GTB, Zenith, and a few other names like that. So that's a possibility of something that that investors might be looking out for. And as the decline continues, it's an opportunity to take position in those names.
All right. So what do you think we can invest in right now? You mentioned some names. Which stocks can investors begin to consider to buy right now as the market continues to dip?
So in terms of the stocks to look out for, like I mentioned, the usual names will be in the tier one, maybe the likes of GTB, Zenith, Access. These are names that have been known. A few other names, maybe like Nigerian breweries, but with these other names outside of the banks, mainly it's not so guaranteed. I mean, it's over the years, it's not so certain. Sometimes they do, sometimes they don't do. So you just have to make sure that you do your analysis very well in terms of checking the specific stocks that you might think might do it. But the thing is, as the prices are declining, it gives an opportunity for taking position even without dividends, because at some point you get to a point where it's a good price to buy, especially if you're a mid-term investor, mid-term to long-term investor, if you have a mid-term to long-term horizon as an investor. So that will provide also a good entry point for the stocks, and then you can ride on the waves of other news that may come in the near future, or probably towards the end of the year. So yes, on one hand, it's dividends might be good, but you may also consider taking position for the near future as well.
Right. In terms of risk factors moving forward, certainly we have to pay attention to results. And yes, given the economic data that we've seen recently, especially the Q1 GDP data, which suggests that Nigeria continues to crawl out of a recession, are you concerned about the quality of corporate earnings in the second quarter?
Yes, I am, because if we look at if we just look at the GDP figures, for instance, in the year-on-year, the economy grew just about 51 basis points, but quarter-on-quarter, it actually declined almost 14%, negative 13.93 or so. So that shows that quarter-on-quarter was actually a decline. In essence, we are not out of the woods yet, and this is a reflection of the broader economy, and these companies play in the economy. So there's no indication that any sector is, as it were now, no sector is really is in the defense sector, as we usually say, because all the sectors are affected. Even the recent decline, all the sectors are affected. So that's a major factor. And then the other thing also is that in terms of in terms of the inflationary figures that we are seeing, it is not particularly encouraging. Let me put it in context. So the recent devaluation of the unification of the naira or the forex, and its consequential devaluation, is giving fears for rising inflation. And once that happens, then what's likely going to happen is lower disposable income for lower, which will also imply lower investments, and of course, lower expansionary projects, which will mean slower economic growth activities again. So we're not out of the woods, and it's giving concern, and it's not looking good for Q2 as well.